going to start off with the first speech and presentation for today. We're going to set the pace for what's to come. So we're going to start with Alpen Capital's latest edition of the GCC Retail Industry Report that will take a deep dive into the sector and, of course, what the future holds. Please welcome to the stage the Managing Director of Alpen Capital, Mr. Krishna Dhanak.
Good morning and welcome everybody. Thank you so much for joining us for the launch of our Retail Report 2022. The GCC retail industry has really been a cornerstone of economic development in the region, along with sectors such as real estate, tourism, and hospitality. It has now become a key barometer for the economic diversification strategy of the region. It is undergoing transformation at an unprecedented pace and scale, as most of you will agree, and therefore is expected to reach almost $296 billion by the end of this year. It has been challenged over the last couple of years, primarily on account of a slowing economy, on account of correction in oil prices, as well as the COVID-19 pandemic, which resulted in lockdowns and closures. However, as a result of that, the retail industry was one of the most significant casualties of the pandemic. Having said that, signs of recovery continue to emerge. Retail sales are on an upward trajectory, and consumer spending is on a high. We've seen population rising with a high concentration of expatriates. There's also been the successful implementation of vaccination strategies, easing of COVID-19 restrictions, as well as government stimulus, which is all helping the retail sales. We've also seen a very high proportion of global UHNIs and HNIs coming into the region and establishing their base, bringing in their liquidity and therefore helping retail spending as well. Added to that is the mega events, Expo, and the upcoming event, FIFA, which is all contributing to increased tourism, which will ultimately benefit retail sales going forward as well. IMF predicts GCC to grow at a CAGR of 6.2% by the end of this year. E-commerce, of course, has had a tremendous growth over the last couple of years. It is estimated to have recorded a growth of 36% in 2020 and a further 21% in 2021 to reach almost $29 billion by the end of this year. In terms of outlook, positive sentiments from a very strong recovery in 2022 continue. In fact, 2022 will serve as a hallmark year given the pent-up demand following the pandemic. There are various factors driving this growth, and I'll talk about them in more detail in the coming slides. Within the segments, non-food retail sales are estimated to grow at a CAGR of 6.2%, whereas food sales are estimated to grow at a CAGR of 5%. Duty-free sales at select airports are expected to grow by about 8.4%, much higher than the overall growth in retail sales, to reach about $8.4 billion. In terms of country-wise market share, Saudi Arabia and UAE will continue to dominate the market. In Saudi Arabia, the revival in religious tourism as well as the liberalization policies will help growth in the retail sector. Whereas in the UAE, the rising expatriate population as well as the incoming of UHNIs and HNIs and many multinational businesses coming into the region will help augur the growth of retail segment. In Qatar, of course, the FIFA World Cup as well as a very, very strong lineup of global sporting events will help in the tourism sector growing as well as the retail segment as well. From a supply side point of view, at about 80% completion of projected additions to the retail space, we estimate 4.5 million square meters of retail space to come up in the GCC in the next 5 years, taking the total organized gross leasable area to almost 23 million square meters by 2026. So, the first and foremost growth driver is the post-pandemic economic recovery, primarily on the back of the implementation of vaccination strategies, easing of COVID-19 restrictions, fiscal stimulus measures, as well as the liberalization policies and visa reforms that we have seen in the region come up. GDP, therefore, is likely to grow at a CAGR of 3.6% in 2023, and stabilize at about 3 to 3.2% over the next 5 years, much higher than some of the developed markets like UK, US, Japan, Germany, and even Singapore. Also, the revival in oil prices and gas prices will result in a significant amount of liquidity in the region, which will only go towards helping the retail segment growth. The region also has favorable demographics, as we all know. We've got 50% expatriate population, and expatriates have been returning. Expatriates also account for about 75% of the private sector workforce. The population grew at a CAGR of about 2% in the last 5 years, and is also expected to grow at a similar CAGR in the next 5 years to reach almost 65 million. And the rise in UHNIs and HNIs obviously will add to the retail segment going forward as well. Travel and tourism industry, of course, has been a major catalyst for the region, for the development of the economy as well as the retail segment. The region has become a global hub now for hosting mega events. UAE, Saudi Arabia, and Oman are among the world's leading MICE destinations today. And of course, added to that are the upcoming mega events in Qatar, and also the rise in religious tourism in Saudi Arabia is expected to boost tourism as well as retail segment going forward. The region is also signing free trade agreements with various countries, which are all expected to diversify their trade partners, and also also reduce and remove tariffs in the region and provide more options on hypermarkets and supermarkets. On an overall basis, the FTAs that are being signed with countries like UK, India, Israel are expected to increase the overall trade value by billions of dollars over the next 5 years. And last but not the least, the rising prominence of e-commerce, as we've all seen in the last couple of years, especially post the pandemic. E-commerce is expected to grow at a CAGR of 15%, thrice that of the overall growth in the retail sales in the next 5 years. Retailers are, of course, using technology to enhance consumer experience and also provide a variety of offerings at affordable prices. Having said that, the region is not immune to challenges, of course. The first and foremost being the impact of the global macroeconomic situation. The region remains highly reliant on hydrocarbon revenues and therefore is very vulnerable to the oil price fluctuations. Also, there are the geopolitical concerns with Russia war, and IMF has already downgraded its growth forecast for the region to about 3.6% in 2023. This is likely to result in tighter economic and financial conditions, which are likely to also then hold back growth as well as retail sales, as consumers will be very wary of recessionary fears going forward. Added to that are the mounting inflationary pressures, primarily supply chain disruptions on account of the war, as well as the continuing disruptions on account of the pandemic, is obviously increasing food prices and commodity prices worldwide. This region, as we know, has 85% of its food imported. Of course, this will reduce high interest rate regime today will reduce the power of consumers' purchasing power, and therefore could also impact retail sales going forward. And the after effects of COVID-19 pandemic still continue. Retailers obviously were already hit very hard on account of the lockdowns and closures, but there's also intense competition coming in from newer players, international as well as local, and the e-commerce, of course, is impacting retailers' margins. The biggest challenge for retailers today is managing operational costs for them. And added to that are costs on digital setup, localization laws, market price utility costs now, and also the upcoming tax measures. In terms of trends, omni-channel business models continue to gain prominence, primarily causing retailers to transition to digital sales models, adopting mobile applications as well as online market practices. Retailers are also working with influencers and ambassadors to live stream in-store events to generate popularity and sales. Digitization and technology has obviously grown over the last couple of years. Cloud computing, big data analytics, artificial intelligence, machine learning, augmented reality, virtual reality, you name it, are all enabling a dramatic shift to online retail. Of course, digitization is also helping streamline procedures, increase revenue generation potential, and also improve overall level of customer experience as well. And lastly, the demand for healthy and organic food has been on the rise, but I think post the pandemic, we've seen a surge in that segment as well. Most countries, as we know in the GCC, have obesity levels much higher than the levels recommended by WHO. In fact, the incidence and mortality rate of non-communicable diseases in the region is the highest in the world. So a growing awareness of these diseases is bringing a shift in terms of consumers' preferences. So in summary, the industry has been challenged over the last few years. Growth was under stress from COVID-19 pandemic, as well as a variety of macroeconomic factors, stretched period of low oil prices, and softening of domestic demands. But there's been positive sentiments. Retail sales are on the rise. We've seen growth in population here. We've seen growth in tourism here, primarily, as I mentioned, on account of government's measures, vaccination strategies, and liberalization of economic policy and reforms. And therefore, the sector remains resilient and is witnessing a growth. What is most important is that the region has emerged much stronger from the pandemic, with its long-term fundamentals remaining intact. Primarily, a rising GDP per capita, we are one of the highest at $55,000 in the world. Relaxation of visa and other reforms. Rising population, dominated by expatriates and a very young proportion of working class people. And the influx of UHNIs and HNIs bringing their business bases into this region. There's been an increase in tourism from mega events, and it's likely to continue for the next 5 years. And last but not the least, the growing e-commerce, which is projected to grow at almost 3 times the overall growth in retail sales going forward. So in summary, all of this will enable the GCC retail industry to emerge stronger, much ahead of its peers. The full report is available on our website. You've got play cards on your table where you can download the report. Thank you very much, ladies and gentlemen. Enjoy the day.